Good day. This is the Elliott Wave Weekly Update for the NASDAQ 100, being recorded on Saturday, November the 16th, 2024. And I am going to begin with the cash market, the NDX, and I'm going to start with a quick review of that, the largest degree that I'm counting at the moment that I'm actually showing on the screen, that being a primary degree as to where we are within that. So there aren't any real changes to make here, but let's do a quick review in any case. So we're in a primary fifth wave higher, which began in October of 2022. So we're basically about a year and a month into this and into this rally. And so within the primary wave five are going to be five waves of intermediate degree, of which I believe one and two are complete, and we're still within wave three and still close to the concluding part and to finishing this wave. But there was a slight change in how I am counting what basically took place on Friday. And so what the current all-time high, which would have been back on November the 11th, what that actually completed. So before I get to that, understand that we're still trying to get up to complete the intermediate third wave. I do believe we're close, but there's still additional upside left to do. And so intermediate wave three, what's going to be inside that are five waves of minor degree, of which we have 1, 2, 3, and 4. So we remain within that minor fifth wave. And within minor wave five, it's going to be five waves of minute degree, of which we remain within that minute fifth wave. So we remain in minute five of minor five to complete intermediate wave three. So I'm going to drop out of this weekly and I'm going to drop down to the 4-hour chart so we can start to see what all of this inside this minor fifth wave, what it looks like. And I believe what I've also done is I've switched back out, at least in the cash, and also I believe in the futures market, where I have 1, 2, 3, 4. Before I was counting 1, 2, and 3 up to here, but I'm flipping it back, which puts more emphasis on how high that minute fifth wave can go. And I'm doing that primarily because what I was counting here is within that minute fifth wave, I had thought we were in 1, 2, and this was the third, and that this should have been the fourth. Now, here's it got blown out on Friday. Why? Because wave four came sailing down. In fact, it gapped lower. It gapped through a lot of levels in terms of a volatility trigger, of a put wall, not necessarily in the NQ or in the NDX, but in the Qs. So a lot of things happened on Friday that triggered the risk off trade. So that then again, when we're in that risk off atmosphere, the negative gamma atmosphere, it's just selling. A lot of selling has to take place because negative gamma catches up with people, with traders. And if the market's going to fall, you're selling into weakness. So with that in mind, let's kind of just see if I can just get this guy to go down a little bit here. And maybe it will, maybe it won't. That just clears up that window a little bit down here on this side. But if I do that, it's going to open up some. There you go. So let's go out of the 4-hour chart, come down to the 1-hour chart, and now we can take a look inside. So again, this turns into 1, 2, 3, 4, 5 minuet wave one. It was an alternate. I began to speak about it last week, I believe probably on Wednesday and then again on Thursday, that our choices, because this fourth wave was getting a little bit too large, that it would push the alternate number 2, which is now really moved into the preferred, which is that it's minuet wave one. Now, to those that have this concept that is like, gee, you change the count to fit what you want. It's like, no, the market changes the count to fit what it's doing. And so I leave it as an alternate until the market tells me different, and it did by producing that stronger downside wave that we had on Friday. We had fib levels that covered it down to those levels. And as they broke, we had additional levels that we could count on to play the downside. Now, what this change in the count suggests is that there is still possibilities and strong possibilities that we're going to pick up the rally again, and it's going to move very quickly, because what we're now looking for, as soon as minuet wave 2 is complete, which would be this minuet wave 2, when that's complete, we're looking for the strength from a third wave. So we should see a very strong impulse back to the upside. Now, again, the alternate, which was presented also last week, remains in that position as an alternate, and that is that the minute fifth wave and the minor fifth wave and the intermediate third wave are complete at this high. I did present it. It remains in the picture. It doesn't really have a tremendous amount of strength because of the pattern of how this is dropping. So now I've got ABCA, ABCB. Granted, folks, that doesn't suggest that we're going to get this large drop, but that it should be more of a flat. Well, that got blown out of the water. And again, these are some of the changes that I'm seeing, that how Elliott and actually even Robert Prechter in his work have left us. That, these the use of algorithms now that really produce all of our trades. We all trade using algorithms, one way or the other, either entering order, executing order, whatever. These are algorithms that are moving within the market. And many of them are, again, looking for, they have different programs set. And that, I believe, has changed labeling, has changed how we start to view different aspects of Elliott and how it was left by R.N. Elliott back in the day. Now, we have to think that he was coming up with all of these, the theory and everything that goes with it, back in the 1930s and 1940s. So with that in mind, everything was based on human emotional reactions. But now we have algorithms that do the trading, algorithms that react to when a put wall, a call wall, a volatility trigger is actually triggered, and that the algorithms pick up that and then react. Okay, we need to adjust X amount of gamma. We need to then sell or buy X amount of underlying, or index, or whatever the situation is, and then that rolls it up or rolls it down to affect the ETF, to affect the indexes. So it's a cascading type of an effect that really just flows in both directions. So we're either going to cascade up or we're going to cascade down, depending on whether we're dropping into a negative gamma or whether we jump back into a positive gamma atmosphere, which then translates to risk on, risk off. Positive gamma, risk on. Negative gamma, risk off. And that's the type of trading that they're doing. Risk off trading, selling. Lots of selling for adjusting and movement. And then risk on is buying. So with all of that in mind, and if this is going to be minuet wave 1, it does expand the possibilities of how high we can get. And that's why when I started to say, yep, we're still close, but the parameters have changed because of switching this to minuet wave 1. That leaves a lot of room for that third wave, which is most often the longest and the strongest. So where can we start to look? Well, obviously, if wave 1 is going to be, well, let's say 19, and this is 21, about, it's quite large. It's not 1,000 points, but it's 19, so that's two. It is. It's 21,000. So it's a little bit over 1,000 points. So what we're looking at is the ability for this market to a third wave. You have to figure how big that is going to be. So, and I'm going to be exact here. So just give me a second, because sometimes on the fly, my brain doesn't do the math as easily as I used to be able to. So it's 1,300 points for wave 1. Now, if that stays in force, in wave 3 has to be longer than 1,300 points. And if we're talking about it here, 1,300 points, we're up to, well, basically, we would go from it, where it needs to break. So if we're going to go up 1,500 points, we're up to here. If we're going to go up 2,000 points, we're up to here. So, and then we're looking for a third, a four, and a five. So the parameters change that we're probably now more definitively heading towards 22,000 to possibly even as high as 23,000. That was my point, that we have quite a bit additional. Now, that would also coincide with all the seasonal charts, as I've been talking about, continuing to show that we should have a dynamic November. So this whole decline really started on the 13th, and maybe it's going to finish on the 18th. So, you got 3-4 days of trading that actually brought the market back down. That's not so destructive in terms of this larger picture of the month of November showing a lot of strength to the upside. So that picks up again. What do we have next week? Well, we have NVIDIA's earnings. We also have volatility expiration, and I'm believing it should be a very large expiration on November the 20th, because there's a lot of very heavy duty positions sitting on both sides of that market, puts and calls. So again, that might go in and along with NVIDIA's earnings. So with that in mind, what can we look for from here? The hourly chart is also showing us that there's very strong possibility that the C wave is not complete yet. And so I've got this as being that wave one takes us down to here, and then putting also the fib all the way down. If this is all we're going to see in wave four, the small wave four. So if we get a little bit stronger bounce, then I have to make an adjustment with this fib right here. And if we get a strong enough bounce where they start to come up to fill this gap, well, then I'm going to have to say that the C wave is done there. So again, now once wave C is complete, what I'm basically going to be looking for confirmation is a stronger impulse type move up to announce lows are in, we're back to buying, we're back to risk on, we're back above a volatility trigger, etc. And that's just going to provide the catalyst for the market to just start to build stronger to the upside. So again, if the C wave is not complete, we have additional support at 20,196. That is where this wave 5 would be equal to the wave 1 as measured right now. And then a break there brings us down to a small cluster, which is on the minuet level. It is 0.882. Now, people say, well, why are you using that? It's because that's what the algorithms are programmed in with. 0.882 is a fib level that the algorithms recognize and trade towards. So that's why I use it. Besides, it's at 0.786, doesn't hold the same validity anymore. So we use 0.882, and it gets pretty dang close to breaking it, right? So you're like, well, you're pretty close to the low of wave 1, and wave 2 cannot take out that low because then it's not a wave 2. So we can get all the way down to there. And so additional support here comes in at 20,064 down to 20,033. And that I would really say needs to hold. If it breaks below 19,880, it is likely then going to be, that's where we'll get the confirmation of that alternate view where this whole, the minor fifth and the intermediate third finished at this high right here. So we're coming down still, and we don't have a whole lot of room down to that low. If we get another solid negative push come yet tomorrow and then into Monday, then we will make adjustments accordingly. Now, taking it back out, because I do have it marked. I thought I had it marked. I do not have it marked. I guess it's over. Let me put that in. So we're going to put in the whole move. And we're going to edit and put the yellow on. And this is actually for the minor, intermediate fourth wave. So granted that we might get up into this high, we could get up this high, still be looking for it to come back to within the fourth wave of one lesser degree, that's the minor degree, and towards the terminus, the endpoint. So we'd be still looking for it down here, 17,435, and possibly even below. Now, I had them on the futures market, but once I do have that top in, I'll run the Fibonacci retracements, and they're likely going to end up right in here anyway. They tend to really do that pretty cleanly. But I'm going to leave that there for right now. So wave one, looking for wave two, and looking for that impulse up. A break below 19,880, 880 would negate this count. And then that pushes it to what I have available, which is that the minuet 5, the minute 5, the minor 5, and the intermediate wave 3 completed at that high, which is 21,182 in the cash market. And we're starting to build in a pretty negative. This would have to be 1, 2. And again, what favors it not being 1, 2 is the fact that these are 3 and 3. So once again, I'm looking for this completion point of C, and it may be done. It may be done. In which case we build. We go immediately build. Tomorrow, when Globex opens, the futures market just starts to go up. And the cash market, when it opens on Monday, will likely gap. If we're up high enough, it'll gap. It'll have to. So we'll bear that all in mind. Now, we're going to go out to the daily chart, and let's take a look at our moving averages. As you can see, on the daily, we've not broken the 50. So the 50 is going to start to go flat on continued weakness. And so about 20,138, 140, it's going to start providing support. So again, it might come down and break 196, but it's going to have that support from the 50 at 20,138, 139. And a break there just brings us down to that next level, which isn't all that far. So we've broken the 8, we broke the 20, and it closed pretty well below the 20, which shows that we probably will get a little bit more downside before we're ready to start to pick up the rally again. All right, so let's go over and look at the NQ. And here we are. So 3, 4, minor 3, minor 4, we're in that minor fifth wave. And this one I'm leaving in this position, and I should, primarily because wave 4, it would have to then be a diagonal. And it just doesn't appear to be all that clean to be a diagonal. Could be. Could this be A, B, C for 5? So if I had to, I could put it back. And in fact, let's just show it that way so that we're going to be in the same type of account as we were. I was going to leave it, but I think I will move it. And so we can show additional what the possibilities would be. Nope, I didn't want that one. Sorry, guys. I want to activate it. So I'm going to move this up to, come on, jeez. Oh, yeah. My mouse sometimes just doesn't like to play along. So let's open that up again so I can get in there and do this. Activate. There we go. I'm going to put that all the way up to there, and that's going to bring it back down to there. So now what are we looking at? We have, I can just redo. Let's look at here and put that first in. Okay, so it does change it and it cleans it up a little bit, puts our window for the completion point between 22,680 to 23,340, I'm going to say. Nice window. And what that would suggest is this is A, B, C for that 5 within the diagonal. Now, again, and the other thing that works against this, I got to tell you, is the fact that 3 is here and it cuts. Wave 5 is already way above it. It's not following any boundaries. So that's another reason. But I'm going to include it because a lot of people are looking at it as a diagonal, and this is what it would suggest. And as I said before, there have been a lot of changes to how things play out because of algorithms, because of options flows. And so I will stretch a little bit here and there to allow for different things. Now, if I put that back down to here, it's just going to change our upside, but not by a whole lot. And we'd still be looking for probably up into here anyway, because that's 1, 2, 3, 4, 5. So either way, I think this is where we end up. But I'm showing you another view of how some people are looking at this in the NASDAQ. NASDAQ continues to be the more confusing market, the more difficult market in terms of because of its components and how they're moving and just how the capital is really swinging around within it. So I'll leave this for now. This is again in the future, not necessarily in the cash. So, but maybe it'll fit and maybe it'll show us the path to where we end up. So again, going out to the daily chart here and taking a look at where our moving averages are, they're pretty much the same, but you can see the 50, it has really come down already into that 50. And again, if this is an ABC, we're going to finish. There we're looking at 20,233 down to 20,191, 109, no, 190 are different. Yeah, 69, excuse me. So it's 20,233, 234 down to 20,170. That's the window that'll finish the C wave. And then this, if it's an ABC, it'll finish that as well. That's ABC wave for the intervening. And then we run up to finish the C wave. So therefore, we'd have to consider this 5 waves up, which we can. So we'll see. This has not been easy. It's not an easy count. And in fact, I will move. Oh, I keep hitting the wrong button. I will move this back down because that's actually the one I'm more comfortable with. And you're going to see it changes it a little bit. There's the 100, there's the 2. So instead of putting it up into here, which we still can do, right? We get a strong enough push, we still get it up at 23,000, but it lowers it a little bit to this window, to this. So, but again, we got 3, 4, and a 5. So I'm still looking up into here, but I want to keep it clean. And this will come back down and this will come back over here. And this will be a larger third. All right, so that's where I'm going to leave it for right now. And our next daily update will be on Monday, November the 18th.